Jo, let's talk about UK equities. What a year 2025 was, bumper return. What's happened in the UK market? Why has it driven to such terrific levels of returns?
I think very few would have predicted over 25% total return for the FTSE 100 for the year, but that's what we saw. And actually, we had some really good tailwinds. There's some very large sectors which performed very well, whether that be banks, aerospace and defence, pharma just recovering from their lows as US pricing deals were carried out. And although UK growth at GDP level was slightly lacklustre, the FTSE 100 is very much dependent on the overseas economies. So 75% of revenues are derived from the overseas countries. But the main thing is valuations. We started 2025, the UK market was very cheap, unloved and under-owned. Even now, we still see the UK market has just simply returned to its median PE, but it sits on a 30 to 35% discount relative to the MSCI world. So still lots of positive drivers for the UK market and why we could still see buyers as people look to diversify away from the US. We still see M&A occurring and just companies retiring their own equity.
But we've got to talk about headwinds. What headwinds would you see that could impact returns in 26?
For UK market overall, it'd have to be political instability risk, with the May local elections being a potential trigger point. We could see increased turmoil in the gilt markets, which would have knock-on ramifications for equity market valuations and higher borrowing costs. If we were to see something like this, you're likely to see concentration within certain sectors, those names more reliant on the domestic economy, and also rate-sensitive sectors, so real estate, utilities, for instance. So in that backdrop, the 250 would probably be underperforming the FTSE 100.
Bring it down to the themes and sectors that you're looking at. What do you think the drivers are for you in 2026?
One thing we're really looking at is just companies with really attractive total cash distribution yields. So as income investors, of course, we're attracted to companies with good income and good dividend yields, but also a lot more popular now across the UK market is share buybacks. About half of companies in the FTSE 100 space are buying back their shares. This is down to strong balance sheets and low valuations. And this is really providing good support to companies, whether that's through better earnings per share growth, also just buying support as well. If you look at the UK market, it's yielding about 3.5%, but you add another 2% on in terms of buyback. So the total cash distribution yield is now about 5.5%. So we think that's a decent starting point for the UK market.
All about cash flows, all about return to investors. Sounds like good news for shareholders. Jo, thank you very much indeed.
Thank you.